Hi everyone, this is Rob Roy and welcome to this week's U.S. market update. As we do each and every week, you can see on the screen now the stocks that will be featured in this recording. And as a quick reminder, if there's a particular stock you're interested in, you can go directly to it using the chapters feature on this video. All right, let's take a look at the markets. You can see that we did have a little bit of a pullback today. If I add on the moving averages, you can see that all we did really is come down and touch the 10-day moving average on the low. We did finish with a little bit of a doji there. We'll see how that plays out on Monday. But this move lower, I don't think is anything of significance. Notice I have left this zigzag on here that goes back to the January lows. If you've been watching these recordings, you're familiar with it by now. It had us moving up towards that 550 level, which is pretty much where we went. I'm going to take that off and show you the rest of the chart from the Elliott standpoint. The other thing to note is that we are right at that 61.8% fib extension level here. You know that's my favorite of all fib levels. I think it's the strongest of all. So the fact that we bumped our heads a little bit right here, completed the zigzag, hit the 61.8% level, all that makes sense. And in addition, we're right in the bottom of this tap box, the time and price projection, which wasn't showing us getting up into this level until before the election. So now that we're at the bottom of the level, the question remains, do we continue higher from here? Do we move up towards the middle or top of the tap box? But again, today's movement I don't think is anything of a surprise, just a needed pause. Let's take a look at the DMI, my favorite of the confirming indicators. That's what I look at to see if we're going to get an extended move when we've hit a particular level. And in this case, a couple things to note. One, there's a little bit of a curl off here on the ADX, which shows that perhaps this move is starting to run into a little bit of resistance. We already know what that is. The positive directional indicator is moving down. That's no big deal. But we do have to note that the negative directional indicator is moving up. When the positive moves down and the negative doesn't move up, that just means the buyers have walked away. But this is showing that some sellers are stepping up and feeling a little bit more emboldened here. So we'll have to watch the market at the beginning of the week and see if we continue to move higher or if maybe we retrace a bit. I've left this support line on here because that's where the 50-day moving average is. And I don't think that if we move back down even to that level, it's where the 50-day moving average is. It's where support is from the previous wave 3 high. I don't think that ends the upward move at all. Perhaps just another needed break like we had here in the middle of May. It doesn't mean it has to happen. I'm just saying that even a move down there, I don't think takes the bullish narrative out. The market, though, is pricing in 2 Fed rate cuts. I don't know about that. I still think the Fed doesn't want to play politics and doesn't want to do anything unless they have to. The economic data has come in weaker. Fed fund futures have a pretty good history of forecasting what the Fed's going to do, but not so much this year. They had forecast a rate cut in June, which obviously didn't happen. So you take it with a grain of salt. I still feel like one rate cut is in the cards after the election. But if the economic data continues weaker, maybe we do see that September rate cut. But I don't think we see one before then. So that's what we'll watch for. All right, now we take a look at the bond market via the TNX. That's where the interesting story is. I think we talk about the TNX a lot in Trade Finder. In fact, we talked about it last week during Trade Finder. And if you haven't registered for Trade Finder, you can do so using the link on your screen. We do it every Tuesday at 1 p.m. Eastern time. So it's during market hours now, which is great. We look at the markets, we look for trade ideas, and we have a live Q&A. There's a great community there. They ask great questions. Love to have you join. So if you haven't signed up, use that link on your screen now and join us. But what we talked about this past week in Trade Finder on the TNX was how the zigzag just completed perfectly, moving down right here to the 100% extension. So there's our nice zigzag pattern. And you can see the bond market has found support here, and we're just kind of going sideways. So the question becomes here, do we extend down to this 161.8% level on the bond market, especially the 10-year, or do we just kind of go sideways from here? Note the Elliott wave pattern is gone. I had mentioned that I didn't like the fact that we had a 5-wave pattern to the upside and said that I'd like to see that relabel. and it did exactly what I was looking for. So we don't have to necessarily worry, I don't think, about that 5 handle on the TNX, but I don't necessarily want to see this big move lower here. I know that sounds counterintuitive, and you might be thinking, well, that'd be great for the equities market, especially the tech stocks. But if we start to get too low on rates, then it is showing a lot of weakness in the economy. And then we start to wonder, would the Fed actually move in September? Would they cut rates right in front of the election? So there's two sides to that, right? I don't think they want to play politics, which is why I don't think they want to cut or raise before the election. I think they just want to sit on their hands, but they don't want to see the economy go too low either in front of the election. So if we start to see significant weakness in the economy, then perhaps they do have to cut in September. So that just remains in the back of our minds. Looking at the dollar is acting a little more normal now. At least we got a little bit of a bounce down from this level here that was right at the point of the triangle. This is just, again, classic Elliott wave stuff. I think if Elliott was here, he'd be really proud of this. We had this expanding triangle. You break out from the triangle. You go back to the point of the breakout, and notice the wave 4, even though it was only one bar, is also right at the 61.8% fib level. So just very classic Elliott wave stuff. But now the question remains, do we see the dollar move back to the upside? I think the dollar can handle this, or the market can handle the dollar going up a little bit more. I don't want to see too much strength in the dollar. It hurts earnings from international companies through the exchange rate, et cetera. You know how all that works if you've been watching these. But I would just like to see kind of a churn sideways here in the dollar as well. I think we're in a nice trading range right here. And if we stayed there, I think that would be the most conducive. But if we do eke a little bit higher, and we know the Eurozone's already started cutting rates, and we've seen international flows into the dollar, and that's kept a little bit of a bid under the dollar. Otherwise, I think we would have seen a little bit lower move with rates coming down. But at this point, I don't think we have to worry about the dollar creating too much harm. Let's take a look at the DIA, looking at the rest of our markets, and we're just kind of sitting here in this trading range. We have a zigzag pattern to the downside on the DIA, but look where we are. We're right back up testing that B wave. And if we break above this level, if we break above the B wave here, and I do want to leave this on, I know it's a lot of stuff on the chart, but if we are able to break above this B level here, then we have to look at the Dow coming up here because it would nullify that zigzag pattern. That's what you want if you're long the market, so you're happy to see this. In fact, we have a little bit of a zigzag right here back to the upside. So we have dueling zigzag patterns here. We have one, at least for now, is still qualified at that 61.8% B wave retracement, but we have this zigzag pattern here that's clearly moving to the upside, which would indicate we are going to take out that B, and then that zigzag goes away, and this upward one becomes the current one, and we'll see if we're able to break above this wave 3 high here and move up towards that wave 5 forecast on the DIA. As you can see, it's lagging the S&P, falling behind just a little bit. Another chart that I wanted to show you that I mentioned that I thought would relabel, I gave you two scenarios in last week's update. We had this zigzag pattern moving to the upside here. We were right at the 61.8% level. We wanted to see if we were going to extend, but as a reminder, this was a wave 5 last week. And I mentioned that because it was at 190% extension, you can go back and watch last week's recording, I can count the number of times on both my hands, and I've been trading Elliott wave since 2001, that we went to a 261.8% extension. That would have been rare. So either we were going to have one of those rare wave 5 extensions to 261.8, or we were going to relabel to a 3. And that's what we did. The chart relabeled to a 3. So still looks pretty good for the Qs, and just this move back to the 10-day moving average. Again, we got a little separation. You all know the rule. No security in any time frame gets too far away from the 10-day moving average. So no harm, no foul on the Qs. They look pretty strong. If we add in the DMI, kind of the same look that we have on the S&P, where a little bit of rolling here in the ADX, meaning some waning strength a bit. The positive directional indicator coming down, again, that's not that much of a concern, but the negative directional indicator going up is. So there are some people that are feeling just a little more confident on the short side. We'll see if that continues into the beginning of next week, something that we will surely want to watch. All right, let's move into Bitcoin. If you watch the live show over on the Hub Financial channel, and by the way, if you haven't, go over there and register right here on YouTube. You can go to Hub Financial, hit subscribe there. You'll be notified when we do these live shows. We focus a lot on cryptos on the Friday live show. Love to have you join those. Have a crypto expert that knows more about the crypto world than I do. I just read the charts. He knows all the stuff that's going on behind the scenes. But you can see we've broken below 65,000. I know it trades 24/7, etc. But y'all know by now it does give an end-of-day print when it rolls over to the next day. And right now, the fact that we closed below 65,000, I think, is a little bit of a concern. We're building a little bit of an inverse head and shoulders, which we talked about during the show. There's the left shoulder, there's the head, and we're forming the right shoulder. So it's an upside down or inverse head and shoulders. If that pattern's going to hold, then Bitcoin should turn and head back up here pretty quickly. But there's a concern with a close below 65,000 that we could come down here to 60,000. So what happens over the weekend is going to be key on Bitcoin to see if we turn and get back above that 65,000 level, complete that inverse head and shoulders, and then start to look to see if maybe we can I'm going to take this bar off, break above this 70,000 level, which we've really struggled to do so far. So we had a little bit of a false breakout out of this triangle. The big move was to the downside, but perhaps we're just completing that that upside down head and shoulders pattern. So we'll see. Even 60,000, if we can hold at 60,000 or above, you could argue that, well, the left shoulder came down to that level. It wouldn't be so bad if the right shoulder did. But we don't want to break 60,000. That's the line in the sand. You break below 60,000 on Bitcoin, now you start to have to talk about significantly lower levels, getting all the way down here to this area right through here, which is more in the 52,000 range. And that would happen pretty quickly if we don't hold 60,000 or above, somewhere in there. Ethereum, kind of the same scenario here, but just slightly better. We are holding 3,500, which is the level we need to hold on Ethereum. You can see what happens if we don't hold it. We had this big move here when they had the approval, and now the SEC's reversed course and said that Ethereum is not a security. So perhaps that puts a little bit of a bid behind it. Slight little symmetrical triangle forming here. So maybe we get a little bit of a bounce off 3,500 and we take off. But you can see, because we had such a vertical move from 3,000 to 3,500, if we can't hold 3,500, I think we hit 3,000 quickly. So 3,500 is a very important level to watch on Ethereum. Let's see how that plays out. Let's take a look at the metals. Look at SLV. We had a big breakout day yesterday from this triangle, and we're right back to test it. Now, I've done a lot of work over the years in triangles, kind of how I made my name in the world of options trading. And I can tell you, this is one of the scenarios that happens. Sometimes we break out and take off. Sometimes you get a false breakout, and the big move is actually the other way. That's still in play. Or the third scenario is you break out, you immediately test the breakout, and then you turn and go higher. I think that's the likely scenario. It doesn't mean that's the one that's going to play out. We have a 50% B-wave correction. We have two zigzag patterns here moving to the upside, and we have that wave 5 tap box. So you can see all of this Elliott wave stuff. When you have multiple patterns giving you roughly the same target, normally that's a higher percentage chance that it's going to occur, obviously, common sense. But there's the wave 5 in the tap box. The upper end of it is where both of those C wave extensions are on these zigzags. The big one that started at the beginning of March, and then the smaller one that started here off this pivot point at the beginning of May. So we'll see if we get some follow through back to the upside on Monday at SLV. That's going to be really interesting to see. USO kind of broke above 77.5. So a little bit of a break today, but we've gotten above that 10-day moving average. So there's the rule again, too far away from the 10-day moving average. So oil needs a break, especially the gas pumps. You all know that I'm a big V8 guy on cars. You can see on the website at evotrader.com. They're not conducive to high gas prices. So I'm not too thrilled with seeing this move to the upside here. in oil, but once again, a classic Elliott wave pattern here. We had the zigzag pattern that came down to the 100% level, went back and tested the previous fib level, then came down to the 161.8. All that's exactly what's supposed to happen. And then you retrace back to the point of the triangle. We've done that. So at this point in time, we're waiting to see how far this impulse moves. Clearly, it's a new impulsive move. In oil, how far does it go? The A wave is the hardest one to predict. After that, it becomes much easier. So do we start to get a bit more of a correction? Are we going to form a B wave here and start into a new zigzag to the upside? That'll be the question that we watch in oil next week. Starting to look at some stocks of interest that you all ask about. First of all, we'll talk about Boeing. And as a quick reminder, each month this year, we're giving away a free Level 3 subscription. That's our three main portfolios, our impulse-based directional portfolio that's infused with AI. We have the volatility portfolio, which is those triangles I've been talking about, and our AI-infused time strategy, which is more of an income-based strategy, calendars, butterflies, things like that on stocks that are expected to stay in a trading range. All you have to do to register is post a comment underneath this video. That's it. Just say anything you want in the comment section, and you will be registered for this month's drawing. Just a quick note, we did do the drawing for everyone that participated in that bonus drawing of Chuck Norris's house in the Bahamas. We have not received a notice back from the winner. As soon as we do, then we'll announce the winner, but once that's confirmed, we'll let everybody know who it was. But for the big monthly drawing, just leave a comment under this video. All right, Boeing. Sitting here in this trading range, we did break below that 180 level, and I thought that could be bad. We could be heading a lot lower, but Boeing was able to stop that wave 3, moving this little zigzag pattern to the upside here, and now we're right back to 180 once again. So we're testing that level. We do have a bearish cross, but we've kind of been doing some whipsawing here with the whole 1030 cross. We had a bullish one up here, then a bearish one, then back to a bullish one, then back to a bearish one. Can't make up its mind. You don't really see that many whipsaws in the 1030 moving average cross, but somebody is really trying to hold that 180 level on Boeing. If we break down below it, then perhaps we come down and test this wave 3 low. We do have a 5-wave to the downside pattern, so we have to be aware of that we could be headed a bit lower. 31% barely gets into that area where you pay attention to the wave 4. We got almost to 200. Not surprising there because that's a point of resistance. So if you want to go long Boeing, you'd have to be very speculative. You could, but you have to be very speculative to jump in now at this level here around 180. The more conservative entry would be let it actually break above 200. So bringing above that 200 level, maybe it disqualifies this 5-wave pattern, maybe not, but that would be the more conservative entry if you're looking to go long Boeing. I think right now you just need to wait and see. If we break down below 180 with follow through, then we can look for a lower move. But as I said, some institutions are really wanting to hold 180, and we'll keep an eye on it. For now, it's just in this range between 180 and 200. So when that type of scenario occurs, it's best just to let it break one of those two levels and trade directionally from there. Looking at Tesla, I just wanted to update you on this. Not much was going on last week when we looked at it. Just sitting here on this 175 level. We did get a little bit of a bounce, but look at this small symmetrical triangle here. It's not very large, but it's pretty well formed. And Elliott himself would always say, don't diss the small triangles. I know the big ones with the breakouts, and that's where everybody wants to be in the triangle world, but the little ones matter too. So it's about a 20, 25 point move. So something's going to happen in the not too distant future here with Tesla. This is kind of the scenario that we had with Boeing. If we break below 175 here out of this triangle, then we're probably coming down to test this wave 5 low. But we've completed this pattern. We got right to the 61.8% retracement level. We moved back up. You can see right here to the previous 4. So this is all corrective stuff following the completion of the 5-wave pattern. And that's all normal. That's all what's supposed to happen. So going sideways and then forming a triangle, it looks like an arrow, doesn't it? When you have this sideways formation and then Finished that with a symmetrical triangle. It looks like an arrow, but it's pointed sideways. Which way we're going to go? We breaking up or down? So same thing here. Let it break one way or the other, either below 175, and then again you can short going down there to that wave 5 low, or if we break to the upside, you'd want to see it break above 200 before you'd really get serious about being long. So I think you just keep an eye on Tesla and see where it goes from here. Thought I'd update you on Nvidia. A little bit of a pullback here, some interest in the financial world talking about Nvidia is getting a fair amount of short interest now. I don't think you're going to create a short squeeze in Nvidia. It's too widely held, way too many people. It's not playing in the game space, AMC stuff, GameStop. So this is just normal. We've had a nice run on the open yesterday, too far away from the 10-day moving average. You can see we closed right on it. Even if we were to pull back a little bit more on Nvidia, I still think it stays strong, still looks good. Let's look at the DMI. That ADX is way up there, so we got to watch that. Does it roll over or does it go sideways? There is a scenario where the ADX goes sideways when it's up in these levels, and it just shows that there's continued strength. If it rolls over and breaks back below 40, that's a different scenario. That means that upward move is over. This little tick up here on the sellers is something to watch in the negative directional indicators. So we're kind of seeing that pattern here. So perhaps we're getting a little bit tired on some of these moves, but I really want to watch that ADX. And we're still okay unless, again, it breaks down below that 40 level. You guys ask about Hong Kong. So we're showing the EWH for Hong Kong here. And you can see the pattern here that we are just big move down. We have this pretty well constructed wave 5 pattern. We got right to a 50% correction in the B wave. Little surprising here to me. The DMI is set up really strong for a continued move lower over in Hong Kong. I don't look at the DMI as much on downward moves because it tends to be a tad of a lagging indicator, and we know downside moves happen quick, but it's hard not to look at how well constructed that DMI is. Now we're right here. This needs to hold. So those of you that were interested in Hong Kong, you need to kind of hang in here at this 16 level on the EWH at least. And if we continue lower, which it kind of looks like that's what it wants to do, then we look to the next level of support would be at that previous wave 3 low. So looking a little dicey there in the EWH. The only thing that would change the mind there is if we get back above 16. But for now, that's a pretty significant 1030 cross there. As you can see, that's a bearish indicator for the short to intermediate term. And that's kind of showing off this move lower. It confirms this break below 16. So until we can get back above 16, I think you need to be short this market. I think that's where things lie. Y'all asked about the stocks. You said that's where the interest is. And you're right. That's where everything's been going on. And you can see the wave 3 move to the upside here. And we did close near the low of the day, but same scenario here as was showing with the Qs. We got a little bit away from the 10-day moving average yesterday, just back. We didn't even touch the 10-day moving average today on the semiconductors. So still looks awfully constructive to the upside there. Let's bring in the DMI here. But you still have that little tick up. So just a one-day move down in these markets seems to have given a little bit of confidence, I guess you'd say, to the shorts to step in a little bit. That could all be taken away on Monday, though, if we reverse and head back up. We're okay here unless that positive directional indicator drops below the ADX. For now, it looks okay. So perhaps this is just normal backing and filling and getting back to the 10-day moving average. But the beginning of the week next week is going to be really important to watch to see if these patterns break down further or if this was just normal sideways stuff in a long bull run that's likely to continue. And last but not least, AMD. Not a whole lot to talk to you about from last week. We're still in this trading range. So we've got a lot of these scenarios here on trading ranges and these stocks that y'all are interested in. Just dead sideways here, you can see the 10, 30, and 50-day moving averages are all in the exact same spot. Same thing here. We completed the wave 5 right near 100% extension, just a little below it. So we go back to the previous floor, which we did. And now we're just in this trading range between 150 and 180 here on AMD. So I think you just sit on your hands here and wait. There was a good sideways trade here, but it's been sideways for so long, I think that trade's gone. So let it either break below 150 or break back above 180 and then trade it directionally from there. So we're kind of just in wait and see mode. What the market gives us next week, that's going to tell a lot on where we go over the next few weeks, in my opinion. Thanks for watching. Hope you have a great weekend and look forward to talking again soon. Take care, everybody.
If you like these recordings, I'd like to invite you to join our new Trade Finder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.